Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 29th of June, 2021. Alright everyone, let's get into it. So actually before we get into it, just wanted to give a quick shout out here that I did another bull case for Ethereum episode, the second episode on Bankless. I was joined by Cyrus Unisi and DC Investor here, with hosts David Hoffman and Ryan Sean Adams, of course. Now, some of you may remember that Eric Connor was part of the bull case for Ethereum number 1. He was, I guess, like hot swapped for Cyrus in this episode, so it's good to get a different perspective here from Cyrus. But the episode, the first episode we did was when ETH was $650. Now, obviously, ETH is a lot higher than what it was back then. So we did this second episode. I think this was kind of recorded after the kind of crash happened. Yeah, I believe it was. We were in like the low 2000s or something. So I guess it was good to take stock of what had happened since December, which is the last time we did the one of these bull case episodes, and kind of project out what we all thought was going to happen over the next, few months and kind of even coming years. So if you're interested in that, definitely go check it out. It's free to listen to on Bankless, and the link will be in the YouTube description below. All right, so only 3 days left to get your Gitcoin Grants contributions in. So if you haven't done so yet, you haven't donated to all of your favorite projects just yet, do so. Do it ASAP, because you've only got 3 days left for your contributions to be matched. And it's really cool to see these stats being posted by Gitcoin each day. You can see here that almost $700,000 has been crowdfunded so far, from 164,800 contributions, over 9,000 unique contributors, and over 4,000 hackers have been part of this grants round as well. This is just so cool. Every single Gitcoin Grants round that has taken place since round 1, it's just been bigger and bigger and bigger every single time. Even during like the downturn here, I believe round 10 is still bigger than round 9 across all metrics. So I'm just so looking forward to seeing this continue to grow over the years. Like, I hope to get to a point where it's tens of millions of dollars being donated each round to open source projects from pretty much like everyone in the ecosystem, not just individuals, but different projects and things like that. But generally, it's really just, with the quadratic matching, the mechanism is basically built to reward individual contributors and get them and make it so that their donations go further than basically, just being able to donate one DAI so that it's matched by up to like 50 DAI or something like that to a project is much better than, only donating one DAI and that's all you can do, right? And that's all that the project gets. So really big fan of these rounds, of course. But as a reminder, yes, this will probably be your final reminder. You've got 3 days left, or 2 to 3 days left, depending on when you're watching or listening to this. Definitely go get your grant donations in before the matching round is finished. So EIP1559 is ticking along on Ropsten very nicely here, and Etherscan has added a new field to their Ropsten block explorer here called Burnt Fees ETH. Now, you can see on the right hand side of this screenshot here, there is a field, obviously, a column called burnt fees, and you can see how much ETH is being burned per block here. So this is just really cool to see, and it shows you the percentage of the fees that were burnt as well. Now, as I've said to all of you before, like, most of the fee revenue will be burned, but not all of it, and the rest of it that's not burned goes to what's called the tip field, which basically goes to miners and in the future stakers as per normal. So I think this is going to be exactly the same as it's going to be, I guess, for our mainnet, right? It's going to look the same here in terms of like the field on Etherscan, and I just can't wait to see like all of this roll in, and it's just going to be fun to watch. And as I said, like, watchtheburn.com is a website that basically has like a real-time visualization of ETH being burned on Ropsten, and then just when that switches over to mainnet, it's going to be really, really fun to see. So yeah, definitely a really nice addition from Etherscan here. They're known for doing this sort of stuff. They are the best block explorer by far. I don't think anyone really comes close. And Etherscan, like, I couldn't live without Etherscan. Let's put it that way. And I'm sure, pretty much all of you couldn't either. So yeah, great to see them doing EIP1559 related fields already on the first testnet. So a lot of you may have missed this because maybe you're like me and you don't check Reddit too often. Like, I used to check the Ethereum, ETH Trader, ETH Finance sections much more regularly than I do now. I think, I transitioned from Reddit in 2017, 2018 to Twitter because Twitter just became the place where everyone was, and basically everyone who was anyone in the Ethereum community was on Twitter as well. Whereas the subreddits, I guess, are still very active today, and there's still a lot of stuff going on there. And one of those things was actually something that I caught today, where Vitalik posted an impromptu technical AMA on statelessness and Verkle trees and state expiry. So you can see in this thread here, Vitalik's answering people's questions in this impromptu AMA, and he's going really in depth. Like, these are paragraphs, and like multiple paragraphs of answers with technical jargon thrown in there and everything. And he pretty much has answered like every question from what I can see, which is absolutely amazing, or at least most of the questions, which is really, really cool. And, this speaks to one of my newsletters the other day that I put out in the Daily Gwei newsletter, where I basically wrote about, sharing knowledge. And this is exactly what the Ethereum ecosystem is known for. It's like just sharing this knowledge for free, straight from the source. Like, you're getting the technical knowledge about the future of statelessness, Verkle trees, and state expiry from the source. Like, Vitalik is one of the main researchers working on this sort of stuff. And, he obviously published all these posts the other day that I highlighted on the Refuel, but he's going in here and just answering everyone's questions, which is absolutely incredible. And I haven't had the chance to read through the AMA just yet. I'm looking forward to doing so, hopefully tomorrow if I find some time. But I just think it's just, like, not just Vitalik, but like we had the Ethereum Foundation Researcher AMA last week as well, which had a ton of good info in there. We have like so many people on Twitter, like from different DeFi apps and DAOs and NFTs, like all the founders and CEOs and everything are all on there, and they're all answering questions. It's not even just on Twitter; it's on Discord. Like, you can go into a Discord channel and basically tag the founder of like a project and be like, "Hey, like, can I speak to you?" And like 9 times out of 10, they're going to reply to you. It might take them a little while to reply because they're busy, or maybe they'll say, "Hey, I'm really busy right now, but this person can help you from our team." So getting access to all of these people is just really easy within crypto, especially, and it's great to be able to go to the source, because you can always get a lot of secondhand information, and especially within crypto, people lie a lot because there's incentives to lie because of monetary kind of like factors. Like, for example, if you're a fan of like one project and you're not a fan of another, and they're competing with each other, well, you may have an incentive or an unconscious bias or a very conscious bias to kind of like, I guess, talk down about another project and maybe spread some information that is not totally true. Whereas if you want to kind of follow up on that and I guess go straight to the source and find out the information, you can. And you can even do that with the biggest projects out there. I mean, this is Vitalik, the guy who started Ethereum. Ethereum is the second largest crypto project by market cap, and he's still on here asking, answering regular everyday people's questions, and he does this regularly, right? When he was active on Twitter, he was always answering people's questions. On Reddit, he spends a lot more time on Reddit these days, I believe, because he likes the longer form format. But generally, if you really wanted to, you can at one point or another get in contact with Vitalik and ask him questions and things like that. And he puts out a ton of educational content too, which I think is really, really awesome. But it's not just him. I mean, there's so many people out there that you can go to direct to the source for, and they're all very public. They're happy to be public, and I think it's a very strong shift from, I guess, the Web 2 world, where I wouldn't know who to contact at any of the top kind of Web 2 products at all. Like, there's not, most of them don't even have a proper customer support department where you can actually just like message them and talk to them, or you can put in a ticket, but it takes forever for them to get back to you. Whereas within the, I guess, Ethereum space, it just seems like you get a much faster response from these people, and you can always find help if you want it. And yeah, to be fair, like, none of the DeFi apps or whatever are nearly as big as their Web 2 counterparts, but Ethereum is, right? And you can still talk to the protocol engineers of Ethereum as much as you want. You can jump into like one of the Ethereum-related Discord channels and literally talk to any of the people working on the bleeding edge, or otherwise stuff on Ethereum from the core protocol level, and not just the core protocol, but layer 2 stuff as well. I mean, anything. Like, you can just go there and talk to them, which I think is a big reason why Ethereum is going to remain the dominant platform going forward, and is going to remain the dominant community, is because we've just fostered such an amazing group of people that are happy to answer all your questions and happy to help you. I don't see that with every community, and a lot of the other kind of like competing blockchains out there and their ecosystems, they definitely don't have this level of openness. I've checked, and I just don't see it at all. Some of them do, like, don't get me wrong, but a lot of them don't have it, like, nearly, to Ethereum's level, which I think is something very special that I hope that we get to preserve in the Ethereum community, in the Ethereum ecosystem as time goes on. But anyway, I'll leave a link to this AMA in the YouTube description, and you can go read all of Vitalik's answers. I think this is actually something that you should, I highly recommend reading it, because statelessness, Verkle trees, and state expiry is a huge thing that's coming to the network kind of like after sharding. And it's actually going to be a massive upgrade across multiple vectors. So, learning about it, getting up to speed with the details, and being on top of it is going to give you an edge over like a lot of other kind of people. And it'll give you more conviction if you need it on like Ethereum and ETH and all that. I mean, this sort of stuff is what gives me my conviction, right? Just being able to see 5 to 10 years into the future, and even like less than that, say like 2-3 years and then 5 to 10, that kind of stuff gives me the conviction to say things like I'm never going to sell my ETH and to stick to it, to buy more ETH every day. And that's how I've done it ever since I got into Ethereum. Is I've just read and read and read heaps of stuff, and I've talked to lots of people, and that's how you keep your conviction, because it's very easy to fall into the trap of the day-to-day market movements and kind of like have some recency bias where you're like, oh no, ETH fell 10% today, is it all over? And your mind plays tricks on you, right? The monkey brains that we have are not very fun sometimes, but when you kind of like reorient yourself and go read some things and maybe listen to a podcast or watch a YouTube video on Ethereum or whatever, it kind of like reorients you and kind of puts your mind at ease and lets you kind of be bullish again. And that's what I've done in the past as well. Like some days, like on the really bad days, I'm talking the days where for some reason something's gone wrong, everyone's shitting on Ethereum, especially during the earlier years, and the price is like really bad, and you kind of like think to yourself, you're just like, wow, like all this negative stuff's happening around me, like am I actually bearish on Ethereum? And then you kind of like listen to these podcasts, read something, read a blog post, read about the future of Ethereum, and you can kind of get bullish again because you're reminded of exactly why you're bullish on Ethereum in the first place. So yeah, I'll leave it at that. A bit of rambling there for you guys. A lot more to get through, so I'll get right to it. So I missed this the other day, actually. It was a few days ago, but Cooper put out this awesome blog post called the DAO Landscape. So basically going over the current landscape of what DAOs look like, particularly, I guess, in the Ethereum space, as most of these DAOs live on Ethereum. And it is absolutely massive. I mean, if you look at his tweet thread here, and you can see this screenshot, this is the DAO landscape of 2021. And, obviously bottom left is cut off because of my camera here, but you can still see the magnitude. There is so many DAOs doing so many different things, and he's put them into different categories here. You have DAO operating systems. So these are things that are basically, I guess, DAOs for DAOs, like making the supporting infrastructure for DAOs. You have investment-based DAOs, the ones that will basically invest in DeFi projects or NFTs or whatever, by pooling funds of capital together. You have grants DAOs, I guess speaks for themselves. And I've spoken a lot about these before, like Uniswap grants, Avail grants, Compound grants, and a bunch of others that basically give out these kind of grants out of, treasuries and wherever they get the money from their treasury from to builders out there. Then the bottom left, as I said, you can't see, but it's collector DAOs, which are basically DAOs formed to collect things, specifically NFTs. A lot of you may have heard of Pleaser DAO already before, which is blocked off by my camera here. But Pleaser DAO has been buying up some of the, I guess, most sought after NFTs, and like basically a syndicate of, I guess, like people that just want to be part of this DAO and just like pull capital together to buy culture, essentially, and to own a piece of internet, crypto, DeFi, Ethereum culture at the end of the day. And then, of course, you have protocol DAOs, which is basically like all of the DeFi apps that have DAOs, like MakerDAO, Compound, Uniswap, all that good stuff. And also other things you may not have heard of before that aren't DeFi, like Audius and Ocean DAO and Universe as well. That's an NFT-based thing. And then service DAOs, there's a bunch in here, like Metafactory. Metafactory, for those who don't know, does like limited edition, I guess, swag, like clothing and things like that. And there's a bunch of other DAOs out here. Lex DAO, I'm pretty sure is like a legal DAO where they offer kind of like legal advice to people. And there's so many others here. I'm not going to go through them all. Social DAOs, I guess, again, speaks for itself, but this falls into the social token category, where you have basically people kind of like coming together and forming like I guess like a community around kind of like something, right, at the end of the day. And there's a bunch of DAOs around this, some social thing. And then at the bottom you have media DAOs, which includes Bankless DAO and Rect HQ and a bunch of other things, basically people creating content and stuff like that. But yeah, so that's the basically TLDR on the landscape of it. But in the blog post, Cooper goes into more details. He describes like what is a DAO, basically the difference between all the things that I just mentioned. But he basically goes into more detail about it. The tools that DAOs are using, and there's so many tools these days for them to use, like Gnosis Safe, a lot of you may have used before, Discourse, Snapshot, Tally, Boardroom, Rabbit Hole, so many out there. And then he goes on to describing how DAOs evolve and how they evolve on-chain and off-chain and a bunch of other information out here. I'm not going to go through the whole thing. You can read this yourself. It'll be linked in the YouTube description. But I think this is awesome. I think Cooper, I've known Cooper for a while. He's a good friend of mine. He's on the bleeding edge of this stuff of like crypto culture, DAOs. He spends a lot of time in this kind of ecosystem, and I think he really gets it and really knows what's happening in this ecosystem and has a really great way of putting it all together, writing these posts and making and letting us like understand what's going on. Because personally, I don't have enough time to spend in like the culture slash DAO side of Ethereum. I try to keep up as much as possible, but it's hard, right? It's very, very hard to keep up with everything. So I think just following people like Cooper is definitely the way to keep up. So I guess on that note, highly recommend following him on Twitter if you haven't yet, but also go read this post. It'll be linked in the YouTube description. So Nansen announced today that they have raised a $12 million Series A round led by A16Z. Now, I talked about A16Z's $2.2 billion crypto fund the other day, right? I'm not sure if this came out of that fund, but, A16Z is going to be very, very busy funding different crypto projects going forward, and you're going to be seeing them all over the headlines. But back to, I guess, Nansen. So for those who don't know, Nansen is basically an on-chain kind of like analysis platform for Ethereum. And I don't know if you have used it. I've used it before. It's absolutely amazing what you can actually find on there. They tag a bunch of different things. There's like sections where it's like you can click on this tag called Smart Money, and you can follow what all the whales are doing on chain. There's the thing called like the stablecoin kind of like oscillator where you can actually see how much of the smart money is sitting in stable coins right now, how much of them are deploying it. You can monitor for things like new contracts being deployed and new kind of like NFTs and new DeFi apps being deployed, so you can be first. You can monitor things like people accumulating tokens and things like that. I've used it to do all of those things. That's why I'm describing them. But they basically, I think a few months ago they raised the seed round, and now they're doing the Series A, which is a $12 million raise, which is absolutely awesome. Blockchain analytics companies are going to be around for a long time, regardless of if we get privacy or not. Just the fact that we have like all of this data available to us, and people do want to harvest it. They do want to have access to it. They want to get that edge. It gives you alpha. So why not kind of, I guess, like have a platform that does this all at once? And there's obviously other platforms as well that do similar things, but I think Nansen is one of the best, definitely. This money is going to be used to do a bunch of different things. They've detailed here, enhancing the user experience, of course, increased support for more blockchains and layer 2 solutions, including Polygon, Optimism, and Arbitrum, which is going to be really cool. You can join their Discord channel as well if you want to find out more or kind of join their community here. But yeah, congrats again to them on this raise. Absolutely awesome. I think, A16Z was the lead, but they also had a bunch of other investors join, Coinbase Ventures, I'm Token Ventures, Mechanism Capital, and a bunch of angels here as well. I won't read them all out, but here they are, basically. Really, really cool. Congrats again. And that's it for Nansen. So Token Terminal shared this tweet yesterday where they said, crypto protocols sorted based on past 90-day total revenue. The right column shows the project's Twitter following. So you can see here that Ethereum is obviously number one with a revenue of $2 billion, or almost $2 billion over the last 90 days. Now, the way the revenue for Ethereum works is that's basically taking the amount of, gas fees that are paid on the network over the last 90 days. So the funny thing is that most of that's getting burned soon. So you can see where the bullishness for 1559 comes in when you start looking at these revenue numbers. But then you can go down the list and you can see the revenue that Uniswap has generated, and Bitcoin and SushiSwap, and then all the way down the list. And Uniswap obviously is a big one because it's generating a ton of revenue for liquidity providers. And this isn't going to any of the token holders yet because that fee switch hasn't been turned on. You can see Bitcoin is coming in at third here. A bunch of other protocols, and it kind of tapers off, and a lot of protocols aren't earning nearly as much as the top ones are. But it's still pretty cool to see just this breakdown here. And I guess looking at it with Twitter followers as well can kind of add some additional context. But it's just staggering how far away Ethereum is from everything else. And obviously you wouldn't compare Ethereum to the DeFi apps. You would compare Ethereum to Bitcoin. Well, Ethereum is like almost 5x the revenue of Bitcoin over the last 90 days in terms of fee revenue. And as I said, post 1559, we're going to be burning most of that as ETH. So this is just insanely bullish. And you know how I was talking about how before how I said that you sometimes have to reorient yourself if you're feeling bearish, and you have to kind of remind yourself like why you're bullish on Ethereum in the first place. I mean, this is always the easiest stuff for me to look at. I look at things like, okay, well, even though the gas fees are low, like what's the total revenue going to be? Okay, assume 70% of that gets burned. Okay, this is the amount of ETH that's going to be burned. Map that out to the total issuance of the year. This is how much we're going to lower issuance by. And then I kind of look at a bunch of other on-chain metrics as well around there, just to kind of, I guess, get an overview of really like the reduction in sell pressure for ETH, because that's obviously going to cause, if the demand stays the same and the sell pressure reduces, then that's going to cause ETH to go up. But it's not just that, right? It's a bunch of other things. Like I check on kind of like how the layer 2s are doing, how the DeFi apps are doing. I also check DeFi app revenue and users, and are we getting more new users into the Ethereum ecosystem? How's the layer 2 space faring, as I said, like and all that good stuff. Like how's the core protocol development coming along. So, but I really just like the most tangible thing you can look at is the usage stats. And I think fee revenue for a layer 1 blockchain, or just in general, fee revenue is one of the best things to look at because of the fact that you have, it's very hard to fake this because it costs a lot of money to fake it. And, on that note, I actually think that the way you can fake it is if you own where that money is going to. So, for example, I've seen, I don't want to kind of like go too far down the rabbit hole here, but I've seen Binance Smart Chain doing like a fair bit of fee revenue. If you go to cryptofees.info, you can see it there. But the thing is that Binance controls the nodes. So they're just paying the fees to themselves. So you can't trust that as a metric at the end of the day because they could be faking that, for example. And this is a clear difference between, Ethereum and BSC is the fact that on Ethereum, there is the Ethereum Foundation or like no central party is getting these fees. Like the fees are going to miners, and miners aren't just like this monolithic entity. There's obviously mining pools, but there are like many individuals in that has that. And same with, Uniswap, like that fee revenue is going to liquidity providers and things like that. So there can be spoofing on Uniswap as well, don't get me wrong. But the thing is, you have to pay gas fees as well. This is Uniswap revenue just for the protocol. So you also have to pay gas fees, which means it wouldn't be worth it to spoof it. Unless you were trying to temporarily pump a token or whatever. Maybe it would be worth it if you were able to get enough attention, but it's risky, it's high upfront costs, and by spamming the network with transactions, you end up causing I guess like the transaction fees to spike themselves. Maybe this changes on layer 2. I've spoken about how before like layer 2 is going to encourage a lot more people to kind of like come in, a lot more bots to come in and kind of fill up that block space. Maybe we see that. Maybe we see accounts just like spoofing and spamming the kind of layer 2 networks because it's cheap to do so, and they're trying to achieve some kind of like manipulation tactic here. So I think there's a lot to look forward to there in terms of like analyzing this stuff, and I'll definitely be keeping an eye on it and probably going over it in my data pump series, which I think it's the 29th today. A new episode will be coming out, I think on this weekend. Yeah, I'll probably get it out this weekend on that one. But one last thing about this kind of table that I wanted to point out is MetaMask. Now, MetaMask has done $32 million of revenue over the last 90 days, which I think averages out to $400,000 a day or something like that in revenue. Now, the way MetaMask makes money is that they have a swap feature built into the wallet, and then you can click it, and then they take a 0.8% fee off every swap, and it's basically acts as like a decentralized exchange aggregator. Now, as far as I know, the overhead for MetaMask is super, super tiny. They have a small team working on the actual wallet itself, so they are printing money here. This is not going to a token holder because there's no MetaMask token. This is not going to any kind of like liquidity provider because there's none of that. This is going directly to the MetaMask team. So they're printing cash like every day from people swap. And obviously, like the more people are swapping, the hotter the market is, the more money they're going to be making. But this is just incredible. I mean, MetaMask went from like, I think 6 months ago, a bit before that, earning basically zero and being free for many, many years to use, and it's still free to use, mind you, to earning, say $400,000 a day in just pure fee revenue. Absolutely incredible, right? And who knows, if they do a token and that token has like governance rights or like a claim to this sort of stuff. I don't know. I don't even think they need to do a token. Like, why would you do a token when you're printing this much money, unless you want it to go like public, right? But I don't know. We'll see what happens there. I still think that there's a higher chance that they'll do a token rather than not, but I don't have any special knowledge there. So Polygon had a big announcement yesterday. They announced Avail, which is their new general-purpose, scalable data availability-focused blockchain targeted for standalone chains, side chains, and off-chain scaling solutions. Or this off-chain scaling solutions basically refers to layer 2s and kind of like some other constructions there. Now, a lot of you may not know what Avail kind of is and what it actually means and what the implications are. So I'll give a quick TLDR here, and you can read the blog post as well for a deeper dive. But essentially, data availability is I've spoken about this on the refill before, but it's basically the main kind of like bottleneck for, as well as bandwidth for like scalability. And the way layer 2s work is that they actually post their data to layer 1 and they take the execution to layer 2. And then there's other kind of technologies that like Validium and things like that fall into, I guess you could say, fall into the layer 2 family, but they basically take the data off chain as well. So they only post the bare minimum of proofs to the blockchain in order to basically verify that everything's gone correctly. Now, what Avail is going to be able to do is serve as that data availability layer for any project or any kind of like chain, whether it be a standalone chain, side chain, or a layer 2 chain, to tap into in order to store their data there and kind of like be secured by this chain, but also for the data, but also be secured by Ethereum. Now, I think this is like the future of a big part of the future of scaling here. I think that this is how someone like a project like ZK Sync advertises their 100,000 transactions per second with something like ZK Porter, which is also doing something like this, where they take the data availability and put it kind of like off chain. As I mentioned, Validium from Starkware is doing this as well. And they all use kind of like something called a very, I guess, like technical, secure mathematical primitive, as they kind of say it here, called erasure codes. Now, you may have heard of this before. I'm not even going to begin to try and explain how erasure codes work because I don't understand it. But, you can Google it. You can check out this post for more information on that. I don't think the technical details are too important here and like how it actually works like on the protocol layer. I think just being able to kind of like understand the benefits of, of kind of like a data availability layer and of Avail specifically. I mean, they mentioned the benefits here. With Avail, you avoid encoding fraud proofs. There's no honest majority assumptions and no reliance on honest full node peers to gain data availability confidence. Now, if you don't know what any of that means, that's okay. They go into more detail about this, but this is, again, technical stuff here. And stuff that's like protocol layer, and really, I mean, end users won't need to know about this. But generally, I'm just really, really excited to see Polygon release this out into the wild. Finally, I think basically they're going to be releasing more and more of this stuff in the future. I mean, I've teased before that they've got rollups coming soon. They've been talking about it. And I think that Polygon gets a lot of unnecessary kind of like hate for the POS chain because that's just one of their solutions. And people think that they're just going to stick to the POS chain and not ship anything else. And as like an advisor to Polygon, I can, I don't want to sound like too much of a shill here, but I can promise you that they are working on so much stuff in the background. It's insane. Like they are, I mean, honestly, I don't want to hype it too much here, but they're working on so much really cool stuff here. So if you're just looking at the POS chain and thinking that's it, well, you're missing the forest for the trees, my friends. And you really do need to pay more attention here. And this is just the first in many kind of things coming to the Polygon ecosystem. So I'm really excited for that. But definitely go dive deeper into this. Kind of have a look through this blog post. There's a bunch of nice graphics as well that explains how this all works. And I'll link this in the YouTube description, of course, for you guys to check out. So another big announcement over the last 24 hours was Compound announcing their new product called Compound Treasury, which is designed for businesses and financial institutions to access the benefits of the Compound protocol. Now, the idea here is simple, as they say. They're basically offering a fixed 4% APR on US dollars with daily liquidity and none of the complexity of crypto. That's the marketing spin. In normal people talk, this basically means that businesses and financial institutions can tap into DeFi without having to do the normal process that we all have to do, such as like going into MetaMask, right, or installing MetaMask, or having a Ledger hardware wallet, or any kind of like, well, having a Lattice One or whatever, or having any wallet, just generally, and kind of like, approving transactions, going through the motions, having ETH for gas fees, all that sort of stuff. The Treasury product is basically abstracting that all away. Yes, it's basically adding centralization back into the mix, but it's centralization in the front and DeFi in the back. So you have this nice, beautiful kind of like, I guess, interface for institutions and businesses to use, where they essentially, this is how easy Compound have made it. They can go from USD, like they can just wire USD into their Treasury account and immediately start earning 4% APR. They don't have to do anything else. The Treasury product handles the rest of it, where they basically take that, convert it to USDC, put it into Compound protocol, and basically pay out the yield to the Treasury kind of accounts, which I think is just absolutely awesome, and also speaks to what I've been kind of like talking about lately about the institutionalization of DeFi. We've already seen Avail teasing this before. Compound's now come out with this huge announcement today. There's going to be other protocols out there. I mean, Maker's already been working on a lot of real-world asset stuff. This is all coming, and this does not take away from DeFi. It does not take away from me and you being able to use DeFi, because at the end of the day, businesses, financial institutions, regular people, quote unquote normies, whatever you want to call them, a lot of them don't want to tap in directly to these things. A lot of them just want a simple, easy to use kind of thing that's built on top of these new rails. I think that's totally fine, because just because the Compound Treasury product exists doesn't mean you or I can't keep doing what we're doing. We can still tap into all the DeFi protocols we want. We can still yield farm the way we want. We can still trade with the way we want. No one's stopping us from doing that. It's just that these new products are kind of like building on top of those rails instead of the traditional finance rails. So they kind of like what's referred to as fintech or neobanks, which, I think is really, really cool, because as I said, this offers just a brand new way for people to get involved. And if you think about the amount of money that's sitting on the sidelines now, for institutions and businesses, they're sitting on stacks of cash, like hundreds of billions of dollars just idling there, earning no yield. Can you imagine even a fraction of that coming into DeFi? What that's going to do for DeFi? It's going to inject so much fresh capital into the ecosystem. It's going to give people a very cheap rates to borrow with as well. So if people want to kind of like leverage long or borrow stable coins to do whatever, yield farming involves a lot of borrowing and things like that, then they can do that. And there's much more capital to do that, and it makes the entire system more efficient. And Compound is just one app doing this. There's so many more out there that are going to be doing this on DeFi apps doing this. And as I said, this does not take away from the true DeFi experience at all. I saw a lot of people kind of concern trolling this today on Twitter, saying like, oh, we shouldn't be embracing this. It's like, guys, like we built new rails. We built new financial rails for people to use them as they see fit. It doesn't matter if it's centralized or decentralized. Anyone can use them. They're open. They're not opinionated on who can use them. And that's where the real decentralization comes from and where the real power comes from. So I'm going to leave it at that, because I got to power through the rest of what I've got here. But essentially, I highly suggest giving this blog post a read. It's short. It'll give you some more details on what Treasury is. But Compound is leading the charge here, being pioneers again. This comes just 1 year after, or like just over 1 year since they launched the comp liquidity mining program. And I put a tweet out before saying, is Compound Finance going to launch DeFi Summer Round 2? Because they launched DeFi Summer Round 1. It'd be poetic if they basically, reinvigorated DeFi and we had like another really massive Ethereum-based DeFi with like layer 2s out there and stuff like that. I don't know. We'll see. Still 2 months left of summer for the Northern Hemisphere. Maybe it'll happen in my summer, as I've been saying. DeFi Summer Round 2, end of the year. You heard it here first. No, I'm joking. Anyway, I'm going to leave it at that. A couple more things to get through. Alchemix basically put out a thread today or yesterday going through a few updates that are coming to the system. So as I mentioned, their Return ETH program was a big success, with over half of the ETH being returned. There's going to be a special NFT for those people. With alETH, they have upgraded their testing and tooling and added additional security features. They plan to reopen alETH to the public later this week when they are sure everything is safe, and the cap of 2K alETH will still be in place and remain there. And Alchemix V2 auditing has begun. So that's the coolest bit to me of this announcement. I guess alETH and Alchemix V2 are tied here. But yeah, and there's like a few governance things to vote on as well. So yeah, really great updates out of Alchemix here. And the last thing I wanted to talk about was something that Raul Jordan posted, where he said, Prysmatic Labs is taking an initiative to fully drop the ETH2 terminology from our Ethereum client. We believe it is the right time to clarify there is only one Ethereum. Now, Raul is one of the core devs at Prysmatic Labs who builds the Prism client, just some context there. And he goes on to say, ETH2 was used as a way of differentiating the work on proof of stake plus sharding starting from current core dev and it's stuck. As we get closer to the merge, it is critical we reduce confusion for users, especially as a large portion of Ethereum consensus nodes are running our Prism software. We urge all implementers to do the same over the coming months. Prism is an Ethereum consensus client and will remain so moving forward into the removal of proof of work. This is, I guess, like going back to what I was saying maybe a few weeks ago from Danny Ryan trying to push this out there, that there's going to be an execution layer and a consensus layer. The execution layer is going to be basically ETH1 and kind of like, I guess, technically sharding later on, and the consensus layer is ETH2, and basically the beacon chain. So the terminology basically happens like the beacon chain is considered the consensus layer. The execution chain is where all the kind of like stuff happens, right? All the smart contracts, all the stuff that we do on layer 1 today. So that's the terminology that I'm probably going to be using going forward. I still probably use the term ETH2 just because a lot of people are familiar with it. But if you see the developers and more people using these terms of like consensus, I guess, layer and execution layer, just know that the consensus layer refers to the beacon chain, the actual proof of stake consensus, and the execution layer refers to the execution layer, right? The Ethereum blockchain itself that we know and love that executes smart contracts, it houses your assets and all those sorts of things. But anyway, I've gone over time. I'm going to leave it at that for today. So thank you again, everyone, for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give that video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks, everyone.